Most S-Corp owners in New York City don't realize they owe a completely separate city-level corporation tax. Today, we break down the New York City General Corporation Tax and why it catches so many creatives off guard.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal,
hosted by Anastasia, Myiesha, and Danielle,
part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy,
we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi guys, welcome back. I'm Aisha and
I am Anastasia, CPA and an enrolled agent.
I did decide that I can be more than just the vibes. Okay. I mean, technically an accountant. I've done stuff, I've been in the business for a little bit, but I also bring vibes. Yeah. I did think about that later.
So today I wanted to talk about, we talk a lot about S corporations and things like that, but there's also a little bit of nuance as there is to everything. So that's kind of like my frequently used word, I guess. There's no yes or no. The answer is always maybe. So when you are deciding whether or not you want to be an S corporation, you do have a few other considerations if you are in New York City.
Okay.
Or one of the boroughs.
Okay.
So in New York City, there is an additional tax filing that the business would have to do.
Why not? Yeah. Well, okay. So what is it?
Right. Because you do have, on the personal level, you have the state income tax, and then you also have the New York City income tax. So the same thing happens on the business side. So normally a pass-through entity, which is an S corporation, doesn't pay any income taxes because the income goes on to the K-1, and then you include that when you file your personal tax return, and then you're kind of paying that business income tax on your personal tax return when you file your personal return. So in most cases, an S corporation isn't paying taxes, but the exception is the states. Okay. So some of the states will still tax the business, even though it's all a pass-through entity.
Okay. So it's very state specific though. Okay.
Yeah. So in New York City has an additional filing, which is another reason why, a lot of people want to lean towards a tax preparer that works in their area.
That's fair.
So that they're aware of this extra filing that needs to happen. But it is called the General Corporation Tax, and it is for corporations. And technically, the S corporation
is a corporation.
Going to be a corporation. So it's going to be subject to this additional tax. And so the tax is about 8.9% of what the profit of the company is.
Okay.
So it can get relatively high.
That sounds like it could. Yeah. Okay.
So normally I say you want to budget for 10% just to make it really nice and easy instead of saying 8.85%, Let's just call it an 8 and 10. And you do need to make quarterly estimated payments.
Okay.
So you need to make sure that you have an account set up with New York City and make sure that you're paying the estimates because there is kind of a rather large late fee if you aren't making those estimated
And this is
payments.
the business making the estimated payments, correct? Okay.
Correct. Okay. So it does need to happen under the business EIN, all of that fun stuff. And I mean, you still need to make your personal ones, but so this is all on top of it.
Okay.
So if you are a single member LLC, you don't have to pay this tax. So that's one of the things where you have to consider, if I convert over to an S corporation, are the tax savings that I'm going to get greater than the additional 10% tax that I'm going to have to pay when I file in New York City? And so in some cases, I would say that the answer is still yes. Because a single member LLC, you are charged Social Security and Medicare on your full profit, which is going to be 15.3%. So we're kind of comparing 10% versus 15% there.
I just want to say for the listeners that you're making solid eye contact with me and you're just pulling out percentages. And I just like, we should, just acknowledge the fact that you now know quite a few percentages about this one specific state. But go ahead. Yes. Okay. So they do this. There's a lot in that brain of yours.
Yes. Yes. Don't ask me how many digits of pi I can say. So kind of, you think if you are the single member LLC and you have the profit of the $50,000, then you're going to pay 15% of that.
Yes.
And that's going to go towards your Social Security and Medicare. But if you are an S corporation, you only pay the 15% on the amount that is your reasonable compensation.
Okay.
So anything above that, you wouldn't be charged 15%.
Okay.
But under the S corporation, you would be charged 10% on that profit above because your salary counts as an expense to the business. So it decreases your profit.
Okay.
And then what you're left with is that remaining balance, which under the single member LLC would be charged 15%, but under the S corporation is going to be charged 10%.
Gotcha.
So there is still a difference in those numbers that you can kind of take advantage
benefits. Of. Yeah. Okay. But it's really just about looking at the bigger picture and like, does this fit for you right now?
Right.
Okay.
Right. Yeah.
Okay.
And, a lot of that comes into, how much money are you actually earning? Because you want to look at the profit. You want to look at what is your reasonable compensation. So that's how much would someone pay you to do this job as an employee, or if you were to go on vacation and you hired someone, how much would you pay them, to do your job? And so we want to take all of those numbers into account, and then also the cost of the S corporation, because it's an extra tax return. Normally they're a little bit more complicated. You have to do your financials. You have to make sure that there's a separate business bank account and you're keeping everything completely separate. You have to run payroll. So you have the cost of the payroll service, things like that. So especially if you're comparing a sole proprietorship, which, they don't need to file the biennial statement. You don't have to file with the state at all. You want to take into account the costs that it's going to be to shift upwards into that S corporation, where you have to, either file the articles of organization and, all of that fun stuff. So this is just another one of those things that kind of adds to the calculation. So maybe if you're within one of those 5 boroughs, that number to get to an S corporation, for it to make sense for you, is going to take a little bit longer, because you really only have that 5% difference between the two. So is that 5% savings more than what all of these additional costs are?
That's fair. Okay.
Versus if you were, maybe in upstate New York, in Buffalo or something like that, you might not, need to pay such a high corporate income tax for the business. So then you have a difference of 15%. And then when the difference between the two is 15%, then you have a much larger opportunity for those costs to, be negligible compared to the savings that you'll have.
Okay, cool. Is it similar to like, how do you considered, is it like zip code specific of like where you are and where your business is in order to know if you have to do this like extra thing with your, the general corporation tax? Okay. Is it?
So a lot of it, we want to think about, where are you doing the business? Like, where is it actually happening? Okay. And kind of who is benefiting from this. So again, it's one of those things where if you have one office in California and one office in New York City, you want to keep the income in the 2 locations separate, because New York City is only going to charge this tax on the income that's earned within the city.
Okay.
So again, it's really important if you're traveling around or you have multiple locations that there's an easy way for you to be able to differentiate where all of that income is being earned, because, again, you don't want to, earn money in Texas and then have to pay this extra 10% because your documentation isn't separate enough to be able to show that it was actually earned in a different area for a completely different client that's not associated with New York City at all.
Gotcha. Okay, so there's definitely some specificity that needs to happen there, and just being intentional of like where you are doing the things that you're doing and who.
Right.
Yeah. Okay.
Yeah. So I mean, it's really easy if you are, like a web designer and you're working remotely from home and you're in Brooklyn, then that's really easy to see. But like I said, if you're doing event work and you're, going all across the country, then you want to be a little bit more intentional with where all of this money is coming from, and then also where are your clients located, because sometimes the states will say, the income is taxed based on where the person that benefits from the service is, not necessarily where you are. So just be a little bit careful if you have some clients that are in New York, even if you're outside of New York, there are certain scenarios where you would still be subject to that New York tax, which is kind of what we saw in COVID. Everybody moving around. So that was really fun.
So, okay, like let's say you have an S-Corp and you are within one of the boroughs, so you know that you're going to have to do that general corporation tax. I think I'm saying that right? General corporation tax. So does it make sense to also still do your pass-through entity tax? Is that just like an additional thing on top of that? And then, okay. So it's really like being intentional of like, okay, if I'm going to have this tax already, does this save me enough in order to want to do the pass-through?
Right.
Okay.
Yeah. And a lot of times, because these are taxes on your income, so they don't affect your profit.
Oh,
so the pass-through entity tax payment doesn't decrease your quarterly estimated payments for this general corporation tax, and the general corporation tax doesn't necessarily decrease your pass-through entity tax payment.
Okay. So they're like, there's some separation there. Okay. Of what they're looking at and how they're calculating things and stuff. Okay.
So, I mean, if anything, in a lot of cases, especially if the S corporation is your only source of income, your pass-through entity tax payment kind of covers your individual tax liability, and then you're doing the estimated payments for the general corporation tax, and then you're covering the taxes for the business.
Gotcha. Sounds like this is when you would want a professional to be included, because you've explained it and then it makes sense, and then 5 seconds later I'm like, okay, wait, like where is everything at visually in my mind?
See, the key is you can schedule all of these payments to go through.
Oh, that's nice. Okay, so it's not something you have to keep.
Right. So that's where having a separate tax account really comes into play.
Gotcha.
Because then, on March 15th, when you know what your required estimated payments are, you could just schedule all of your estimated payments at that time. It goes into it comes out of your tax account, and you're already like pre-saving everything that you need from that account, if not a little bit more, because we use the extra for your retirement funding. So that way things can happen really seamlessly and you don't have to think about it. But also, if your income does change pretty drastically, you could still call them and ask them to cancel the payment. As long as you do it, like, I recommend 2 days before the payment is actually scheduled to be processed. You just call them and they can cancel it, and you can, redo the payment or completely cancel it. But at the very least, you have something that's going through so that you're not just constantly worrying about all of these deadlines that
because it's a lot and there's a bunch of different things. So I feel like even with working with professional, it would get to be like, oh, this is like, I'm the person that I go to an appointment and I schedule my next appointment because otherwise I'll never see them again. So yeah, just being able to it's good. You can schedule out, like you can plan all of this ahead and just get that going. So scheduling out, having a tax savings account, are there any other tools that can help with like maybe the income side of like separating out what is considered income for the general corporation, like within the New York City stuff versus this? Like, are there any other cool tips or tools or tricks for that?
Yeah. I mean, I think that's generally it's a little bit tricky because even California has an additional tax. It's only 1.5%, so it's a little bit lower,
A little bit, like a lot lower. Yeah. Okay.
But then you also have your 2% for City of LA. And so all of these things. So that's why, even if your marginal or like your effective tax rate is, let's say 15% or even 20% for your effective tax rate, you still want to save a little bit extra because there are a lot of other things, OST is like, just when you thought you were done,
we got more things.
So there are definitely a lot of costs associated with, moving to that next level. So like you said, just another thing to consider, really sitting down, planning out, what does this year look like? What is even my goal here? And, maybe this is a great example of an S corporation not being for everyone. There are certain situations where it might be more beneficial for you to stay as that single member LLC or a sole proprietorship. So really meeting with a tax professional and being able to plan out what does the future look like, and also being able to check in with them to see kind of how you're progressing and whether things changes. Because I always say, like, there's different seasons in your life. So just making sure that you're constantly going back and making sure that this is still the right fit for you. And like I said, once you're in New York City, we're going to have a couple different questions, when we convert over to that S corporation and things to consider. But that doesn't necessarily mean that it's not a good decision. It's just another thing to kind of be aware of and add into your calculations.
Well, I also think it's just helpful to like New York listeners to like know what to ask. Because if you don't even know what to ask and you don't know that these things exist, like you'll be like, oh, like with this, like maybe the S-Corp is great for me, but there's like a whole other sector that you have no idea about. So just knowing the questions to ask the tax professional when you do speak with them of like, okay, if I stay here, can I see what that looks like? And if I do this, can we get an idea of what this looks like with these things? Because I know at least the name. You may not know the nitty gritty. You don't need to do that. That's why there's a professional, but just at least have the knowledge that it's out there and that like you should account for it. Yeah.
Because there's a lot of things where, everybody loves an S-Corp now. So you can just go online and create an S corporation yourself, or there's like nationwide companies that will do it. And support you and what have you. But they may not know some of these different little pieces of individual areas, so it's kind of up to the business owner to know that this is their responsibility and to ensure that it's part of their tax filing. It's not the responsibility of the tax preparer to notify you that you have this requirement. So even if you have a tax preparer and they haven't been filing that for you, it's not, depending on what your engagement letter says, it may only say that they filed the federal and the state. They may not have anything that says that they'll file the city return for you as well. So
just knowing to like what to look for, what to ask for, like what do you need kind of thing. Yeah. You can't go wrong with some more knowledge.
Yep.
Okay. So for like, well, I guess we've kind of answered it, but like, what should a New York S-Corp do today to like avoid any big problems? Is ask some questions.
Yeah. I would say definitely, if you're in the 5 boroughs, make sure that you're paying that quarterly estimated payment because, sometimes that late fee is going to be pretty large.
Okay.
Especially if you're not expecting any payment at all, and then also generally when we file, it's, you pay the amount that's due, then you have any late penalties, any interest, and then also making the first quarterly estimated payment. So just knowing it could be like a $6,000 tax bill, and just being able to ask the questions so that you're aware of it, so that you're not surprised when, this pass-through entity that's not supposed to pay any income tax suddenly costs you $6,000 when you go to file.
Yeah.
So,
okay. I think those are very helpful.
Yep. And then it also, if you're going to switch over to the S corporation, just having somebody show you that it's still worthwhile. Yes, there is this extra tax. Yes, there are these extra costs. Yes, there are these extra responsibilities, but what do I get out of it at the end? And how is that helping me go forward to where I want to go? So
it's really funny because it still reminds me how you say like S-Corps are like a baby and how they just let you take a baby home from the hospital. It's just like, you just go sign up and get yourself an S-Corp. It's just like, it feels a lot like they just let you come leave with this newborn. You're like, you'll figure it out. Here's your responsibilities, or don't tell you what they are. So it's super fun. Okay, cool. Well, thank you for explaining it to us.
yeah, and so if you have any questions about this New York City General Corporation Tax, feel free to put a message below or send us an email, and we are more than happy to talk through your particular situation.
Thanks, guys. Bye.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your console, and let's make your business work for you, not the other way around. You've got this.